Minnesota Office of the State Auditor presents the Fire Form, Defined Contribution, or DC table. In this video, we will be focusing on completing the Defined Contribution Allocation Table, or DC tab for short, which is included on the Fire Form. Before completing this section, there are a few required documents you will need. First, obtain copies of the Special Fund Bank and Investment Statements for the reporting year. Next, obtain information about the service pensions and benefits paid during the reporting year, a copy of the Relief Association's bylaws, information on any members that joined or separated from the Relief Association during the reporting year, information on any member leaves of absence during the reporting year, and a copy of the previous year's DC table will also be needed. Once you have accessed the form and gathered the required documents, click the tab titled DC at the bottom of the Excel file. If the Relief Association provides a DC table of its own format, rather than the version provided by the OSA, select Yes in the box at the top of the page to indicate that you will be submitting your own DC table separate from the Fire Form. If this is the case, there will be no need to complete the table below. Please submit your separate DC table as a PDF document through our SAFES website. If the Relief Association intends to use the template provided below, make sure the box is marked No. If the Relief Association provided its DC table in the OSA format the previous year, much of the member information on the form will be pre-populated. Be sure to verify the member statuses, birth dates, entry dates, separation dates, leave of absence amounts, and beginning member balances with the Relief Association's records and the prior year DC table. For any new members that joined the Relief Association during the reporting year, enter their name, status, birth date, and entry date on the DC table. If a partially or fully vested member has separated from active service, but the member has not requested a service pension or has not met the minimum age requirement specified in the Relief Association's bylaws, change the member's status to deferred and enter the separation date. When a member's service pension is paid, change the member's status to paid, and they will not be included on the next year's DC table. If the member separated from active service before becoming vested, enter a status for the member of separated, not vested, and enter the member's separation date. Members with a status of separated, not vested, will need to be reported on the DC table for a minimum of 5 years before their balances can be forfeited. When the member's account balance is forfeited, change the member's status to forfeit, and they will not be included on the following year's DC table. If a member was on a leave of absence or break in service at the end of a reporting year, enter a status of inactive and increase the leave of absence amount by the number of months the member was on a leave of absence during the year. Members with a status of inactive have not separated from active service and should not have a separation date. If a member had a leave of absence or break in service during the year and was active at the end of the reporting year, increase the leave of absence amount by the length of the leave and leave the member's status unchanged. Keep in mind that the leave of absence/break in service column is cumulative and should include the total number of months for the member's career. If a member returned to active service after a leave of absence or break in service, change the member's status to active and select Yes from the drop-down menu in the Return to Service column to indicate that the member is a Return to Service member. Please use the member's original entry date in the Entry Date column on the DC table. The leave of absence/break in service column should also be increased to the total number of months between the member's periods of active service and any additional leaves of absences the member previously had. In the active service credit column, enter the number of months during the reporting year each member met the active service credit requirements. This number should align with the fire chief's service credit determination. The beginning balance for each member should match the member's ending balance on the prior year's DC table. If revisions were made to the prior year's DC table, the changes may have resulted in revised ending balances. the ending balances from the revised DC table should be used as the beginning balances on this year's DC table. The next column shows the allocation of net investment income. The total amount can be found on the Financial Information tab of the Fire Form by adding the special fund interest and dividends to the appreciation/depreciation amount. Investment management fees should not be included on this column and will be deducted in a separate column to the right. For members with a status of active and inactive, the total investment income should be allocated in proportion to their beginning account balance. Allocations may not be based on years of service. Members who are separated and not vested should not receive net investment income allocations unless authorized in the Relief Association's bylaws. Beginning January 1st, 2021, all deferred members are required to receive investment allocations under one of three interest types as specified in the Relief Association's bylaws. The three deferred interest types offered are full gains and losses, separate account, and separate vehicle. For members that separated from active service under the full gains and losses deferred interest type, they should receive investment income allocations in prorated shares in the same manner as active and inactive members. If a deferred member separated from active service under the separate account deferred interest type, the member should be allocated net investment income at the rate earned on the account. For members who separated from active service under the separate vehicle interest type, the member should receive net investment income allocations at the rate earned on the separate investment vehicle. If the bylaws do not specify a deferred interest type, the deferred members will receive net investment income allocations under the full gains and losses deferred interest type. If a member separated from active service under a deferred interest type that is no longer authorized, the member will receive investment allocations under the full gains and losses deferred interest type unless the bylaws were amended prior to January 1st, 2022 to specify the separate account or separate vehicle deferred interest type. Moving on to the next column, contributions are made up of state aid, municipal contributions, and any additional revenue that was deposited in the Relief Association Special Fund. Contributions are required to be allocated in equal shares to active members. If monthly proration of service credit is authorized in the Relief Association's bylaws, the Relief Association would determine the total number of months of active service for all members and divide the contribution total by that amount to reach the contribution amount per month. A member's number of active months during the reporting year would then be multiplied by the per month amount to reach the member's contribution allocation. Keep in mind that if a member was active for at least 1 month of service during the reporting year, but separated from active service prior to the payment of the Relief Association state aid, the member would still be entitled to a portion of the contribution allocations. If a Relief Association's bylaws provide for full year allocations, a member needed to be active for the full calendar year to receive contribution allocations, even if the member met active service credit requirements for only a portion of the year. The forfeitures and forfeiture income column will be used for members who are not fully vested when they receive their benefit payment and for non-vested members who have been separated from active service for at least 5 years. The amount forfeited will be recorded as a negative value in the row where all or a portion of a member's balance is being forfeited, and a positive value in the rows where members are receiving forfeiture income. Forfeiture income is required to be allocated in equal shares to active members, the same manner as contribution allocations. If monthly proration is offered in the bylaws, note that members who received contribution allocations should also receive forfeiture income for the same number of months during the reporting year. To complete the benefit expenditures column, refer to the service pension and benefit payment information for the reporting year. Enter the service pension or benefit payment amount as a positive number, and the form will subtract the amount from the member's balance. Once a member's entire service pension has been paid and any non-vested portion forfeited, the member's ending balance should be $0. Note that members are paid a supplemental benefit when they are paid their retirement or ancillary benefit. The supplemental benefit is an additional lump sum disbursement refunded by the state and should not be included on the DC table. The Relief Association should include the supplemental benefit as an expense on the financial information and cash flow tabs in the year the payment is made. The supplemental benefit reimbursement should also be included as a revenue and an accounts receivable on the financial information tab in the year the payment is made. If recorded correctly, the transaction results in no net change and would have no effect on the member account balances. The total amount of any administrative expenses paid from the Relief Association Special Fund during the reporting year can be found in the Financial Information tab of the FIRE form in line 2. Note that the investment management fees should not be included as administrative expenses and will be deducted in the next column. The admin expense amount should be deducted from the members as defined in the Relief Association's bylaws. Enter the administrative expense deduction as a positive number on the DC table, and the form will subtract the amount from the member balances. The investment management fees are required to be deducted from member accounts in proportion to the member's account balance in the same manner as net investment income allocations. Deferred members who receive net investment income allocations under the full gains and losses interest type receive investment management fee deductions in the same manner as active and inactive members. Deferred members should receive investment management fee deductions based on the fees incurred on a separate account or separate vehicle if one of those interest types are offered per the bylaws. Separated not vested members do not receive investment management fee deductions unless specified in the Relief Association's bylaws. Enter the amount of investment management fees to be deducted from the member's balance as a positive number, and the form will subtract the amount. Once all of the applicable columns have been completed, compare the column totals to the amounts reported on the Financial Information tab of the FIRE form. Each column total, less any supplemental benefits, should match the corresponding amounts on the Financial Information tab. Investigate any differences before continuing. Keep in mind that the FIRE form cannot be submitted unless the total ending balance on the DC tab matches the special fund total net assets amount reported in line E of the Financial Information tab. After the totals are confirmed, you have successfully completed the DC tab of the FIRE form. This concludes our training video on the DC tab of the FIRE form. To view all FIRE form training videos, including a video on how to navigate submitting the form through SAFES, visit the Training Opportunities page under the Training and Guidance menu option from our homepage.